Hi guys, in this video I want to show you one of the best breakout strategies. You will learn how to identify a reversal zone and under which conditions where to put your entry. So make sure you stay tuned till the end. We will start right away. As you see, we're in the British pound US dollar in the 15-minute chart using Heikin-Ashi candles. There's a special reason why I'm using Heikin-Ashi candles. I will tell you later in this video. But first let's start with the reversal zone. I'll pick the horizontal line to mark that area. These wicks are building the bottom here, and this wick is building the top side area. Let's first check the underlying trend. So for that reason, we go to the 1 hour chart. And you see there's an ongoing upwards movement. So let's switch back. In the 15-minute chart, we have a strong downwards movement here. And then the ongoing uptrend ended and a sideways range started right in this area where we have drawn it in. So this is our reversal zone. So we're looking for a breakout out of this sideways range. After the market showed weakness, it's possible that the ongoing uptrend is reversing to a downtrend, or it's just a pullback that is ending at this point when the market is breaking out to the upside. So let's find a breakout entry. At this point, the market is breaking out of the reversal zone the first time. It's breaking out to the upside, which is the direction of our underlying trend. There's actually no right or wrong for trading a breakout. There's traders that would have entered the trade as soon as the market is breaking out of the range. I wouldn't have entered it here. I would wait first. If it's a false breakout, the market is coming back into the zone, but then not going down the whole way, which gives us a better possibility for a trade entry long with a better chance risk ratio if the market signals upwards movement. And at this point, when the Heikin-Ashi candles turn from red to green, this would be my signal to enter a trade long. I'll show you the Fibonacci retracement at this point, and you see the pullback went to the 62% line. This is an indication that the pullback is ending and the market is going to continue further long. Additionally, the Heikin-Ashi candles changed from red to green, signaling upwards movement. The market has already shown is willing to go through, didn't make it the first time, but now in this high area of the reversal zone, it's signaling upwards movement. This is why I'm entering the trade at this position. So let's see how it looks. This, after the first green candle, would be my entry long. I would put the stop loss right below the reversal zone to leave room for the trade and to prevent the trade from being knocked out by a spike down. And the first target could be at this last high, but I would always put the target a little below the last high to make sure the market reaches this area and doesn't find resistance before. And your second target, you could put a lot further up because you see it's still making higher highs and higher lows. So there's a lot more room for the trade. You see the market continued without making a lower low. Could put your first target here so you save your money. It's almost a risk reward ratio of 2 with 1.75. And your second target, you see it's not making lower lows. You could place, if I zoom out a little bit, you have your resistance area right here. I will put in a line. You have it around this level. Your second target could be up here, and I will show you this would be a risk reward ratio over 5. And by splitting the target, you make sure if the market is bouncing off this resistance area, you still have your profit made. But you still have the chance to let the market go even further and make a lot higher profits than just with the first profit. From my experience, I know this way of trading or this strategy works out for me. But for those of you who don't have that much experience yet and are afraid to enter a trade by a breakout which is this small, for you I would recommend that you wait until the fake breakout comes back into the zone, and then you wait for the next breakout, which is happening here. And then don't enter right away. Just be patient, take yourself some time, and wait until the pullback is happening. And this is your area where you can find your entry. You could either place your trade entry right here, use the Fibonacci retracement, plus when the Heikin-Ashi candles turn from red to green. Your entry could look like this. Your stop loss I would set down here. But you see, for your first target here, the reward risk ratio is just too bad. So your target would be right here below the resistance area we drew in earlier. This would be a risk reward ratio of 3, but your trade relies on the fact that the market is going through this area up to this target. The possibility for this is good because we're in an underlying uptrend. But you see, in the other trade setup, we would have saved our first profits right here. You see, there's always advantages and disadvantages for every kind of strategy. So find your own personal way which fits best to you and to your profit and to your risk attitude. This is it for this video. I hope you enjoyed this content. Please leave me a thumb up if you do so, and also write me a comment if you have any questions or suggestions, and don't forget to subscribe to my channel for more interesting videos to come up soon. See you there!